So now let's come to the topic of discussion today. Don't expect this from momentum. Let's see what we should not be expecting. So, of course, please do subscribe to the channel and do like this video if you do before we move ahead. So, is it fair to expect momentum to outperform during all kinds of correction? This is a very frequent question that we get, and with this study, maybe some of this will get answered. Also, other queries that we get is when will I see multi-baggers? How do trade stats change for uptrends and downtrends? Do downtrends see bigger losers? Do downtrends also see big winners? Do we outperform in the downtrend? And so on and so forth. So what we've done is we've taken a standard absolute momentum strategy and compared it with the index, underlying index, let's say Nifty 500, and the last 5 odd years, January 19 onward, 6 years period that we have taken. We have split this period in 5 different phases. So the first phase being from pre-COVID to COVID fall. Second phase being from the bottom till the first rise. Third phase being this flat portion that we got from October 21 to March 23. Then fourth phase was perhaps March 23 to September 24. And then since then the fall and the current rise that has gone through. So in the first phase, CNX 500 was minus 26%. In the next one, it was plus 122%. Then it was minus 2% across this. It was plus 62% across this, and it's minus 4% for the index. Now in phase one, when the index was down minus 26%, this model strategy that we are picking uh, was down 12.59%. It had 38 transactions with winning trades only 15%, losing trades 23%. Percentage of winners 39%, percentage of losers 61%, but average gain on gainer is 13%, average loss is 11%. So you can see that while we remained flat and then crashed, there were no large on average losers. The biggest loser was 30%, and out of let's say 20 stocks, the average loss was only 11%. Second phase, the remarkable rise phase, where the index itself went up 122%. This strategy is up to 245% with 55 transactions, of which 69% are winners. And the average gain of a winner is 124%, whereas average loss is only 10%. So again, the percentage of winners are also more in this phase, and the average loss is extremely low. The ones that there are some losers, of course, there were 17 losing trades in this period also. So biggest winner is very big, which also pulls the averages up, and biggest loser is small at minus 18%, so on and so forth. Third phase, again a flattish phase for almost 1.5 years, where the index did minus 2%. The strategy was down almost 9%. uh, 33% winners, 67% losers. uh, Average gain in the gainer stock trades 12%, in the loser stocks 13%, biggest winner being 33%, biggest loser being 40%. So it is neither here nor there sort of situation where you're just bobbing around this phase. Next phase, strong up phase, where index did about 62% up in a span of again 1.5 years roughly. Here again, the model strategy is up nearly 100%. 28 transactions done, of which 22 are winning trades. 79% trades result in winning, and average gain is 43%, whereas average loss is 7%. So again, in a strong uptrend, average big average gains, and percentage of winners is also very very high. Biggest winner is large, and biggest loser is very small at minus 30%. And then the last phase since September 24, where the index has lost 4%, momentum strategy is down 16%. So big loss here. 18 transactions, 17 of which are losers. So anything that you are buying is resulting in a loss. 94% transactions in this phase have gone into a loss. Average loser is 14%. You have one winner, which is basically giving you nothing. So you basically are losing ground right here, because neither is the market going up, nor are you able to pick any major winning stocks. So during downtrends, the 3 downtrends that we got in the last 6 years, you can see that in the first downtrend, the momentum strategy beat the index. In the second downtrend, it could not beat the index. It was much more deeper cut was there, and in the third one also a deeper cut was there. So sometimes you will see in the downtrend momentum strategy outperforming depending upon how deep is the downtrend. And usually, because I'm talking about an absolute momentum strategy, in shallow downtrends the strategy will not go to cash and perhaps may bleed more. In very deep downtrends like we got in COVID, the strategy will go to cash and stay in cash till the market sort of resolves itself. um, but in all cases you will see the biggest loser will not be very large, because it will exit the losers and go towards cash, or try to get into winners, and the average winner would be perhaps equivalent or more or less similar in the similar category as the average loser during downtrend. So the idea is that in the downtrend you don't want to be losing too much money, although sometimes you will have a deeper cut. So percentage of losers are on the higher side as compared to uptrends, of course, yes. But average loss per trade during downtrends is fairly controlled. Biggest losers are also fairly controlled, despite the market doing what it does. Now, when we see the uptrends, we had two uptrends in this 6 year phase. And in these two uptrends, you can see that the model beat the index very handsomely. The percentage of winners also very high, the average gain versus average loss also very high, and bigger winners also very high. So you can see that full benefit of momentum strategy is taken care of when there is a strong uptrend that is happening. Now the full picture is from Jan 19 to September 24 is the percentage of winners is almost equivalent. So you may say, half your transactions go to wins, half go to losses. But the beauty of the structure is that the average gain on winners will be much more than average losses on losers. And that is why it's like the biggest winner is 482, the biggest winner is 482, biggest loser is 40. So you can get the math together and the average gain will be much, much higher on that. So the takeaways here are that, many small losers will be there, few big winners will be there. Downtrends will usually not see those big winners, but losers will continuously be checked out from the portfolio. And also in absolute momentum strategies during very sharp corrections followed by quick recoveries, there may be a performance lag, because as the market goes down you may be getting out of stocks, and then if the market comes back up very quickly, then the trends will take some time to form, and there will be a lag in terms of when you will be reallocated and those stocks will then start to perform. This of course does not happen in the rotational style where you go down with the market indices and then come back with the market indices. So if you're starting at a beginning of a trend, it can be difficult to digest what is happening. But do wait for uptrends and give it a long-term view, because you need to have one or two big uptrends in your pocket to really make good outcome out of that. And big winners in uptrends will more likely compensate for the many small losers that you may get on the way. So let us know in the comments any other case studies you'd like to take up for better understanding of momentum. This was one case study on absolute momentum strategy, how they perform over different parts of different styles of the market cycles. And I hope you got a flavor of how things work here. So thank you so much for watching this. Do like and share these videos and do subscribe to the channel. Thanks. Bye.